Now, let's move on, okay? Now, identify the cost types from the graphs. So, this is one other type of question. So, we are discussing cost analysis with the type of questions, probability is very high of these types. So, we saw some kind of theoretical questions on cost terms, types of costs, etc. And now we are moving on to, and we also saw the question match a following type on shape of the cost curves exclusively. Now in this type you have to identify the two cost forms. If you are able to tell, you let me know, otherwise I'll give the answer. Graph A, graph B. Look at this. Slight indication of my cursor is there actually. And this. So this is your semi-variable cost, where this region would be a fixed cost component and this region is your variable cost component. Fixed cost component and variable cost component. I think we saw in the class example about electricity bill charges, no? Where there's a standard rate for everybody plus user based charges. You know, you have two components like that, right? Isn't it? So that is where we have to speak about what? The semi-variable. It is not completely fixed, completely variable. Semi-variable is a combo of fixed cost and variable cost. And now you have the step cost. I think one of the case studies, examples we saw, no? Hike in the salary of the foreman, right? So they will ask you, what does this indicate? Step cost. It'll be there stable for some time. Suddenly, because when the production exceeds the threshold, expensive to shoot up, so it'll raise, it'll be there for some time, then it'll get stabilized, it'll raise, it'll get stabilized. That's why the nature of the cost. So your graph A is semi-variable cost, graph B is step cost or step cost. Okay. Now, this is an important segment I'm telling you not to miss. That is the relationship between AC and MC. In the class also I was telling you that. They will ask you the relationship between AC and MC. And in one particular graph, you have seen all. You know, you have the rectangular hyperbola AFC. You have your ABC. You have the AC. MC will be passing through the minimum point of AC. Mark that. If you want, even you can draw the graph. MC will pass through the minimum point of AC. Remember that. Now, regarding the relationship between AC and MC, remember when AC is falling, what will happen? MC definitely ought to be below AC. When AC is rising, please remember MC will be greater than the AC. And when AC remains constant, MC is equal to AC. Please remember, and the MC curve always, you know, to the left of the AC curve, that's known from the graph itself, it passes through the minimum point. Remember this point. Okay, it passes through the minimum point. MC curve cuts AC curve at its minimum point. Okay, so that is the main thing here. And the relationship between TC and MC also I've added here, though this is one which I find in the question papers, you know, like correct and incorrect. So that's important. But we have also added for you the relationship between TC and MC. You know the formula. I think yesterday also, you know, you were using the formula when we did this total utility and marginal utility. Mudit was saying he did TUN minus TUN minus 1. So a formulaic expression is there. MC is when MC is diminishing, TC increases at a diminishing rate. We all know that. You know, the rate at which it diminishes, at which it you know, increases is diminishing. The rate at which TC is increasing is diminishing. Okay, TC is increasing at an increasing rate when MC is increasing. TC is increasing at an increasing rate when MC is increasing. So when MC is diminishing, what is happening? TC is still increasing but at a diminishing rate. Okay. When MC is increasing, what is happening? TC will be increasing at an increasing rate. So when MC is diminishing, TC is increasing at a diminishing rate. And when MC is increasing, TC is increasing at an increasing rate. Okay. When MC reaches the lowest point, TC will stop. increasing at a diminishing rate. Is that clear? So we have seen this even in cost, revenue, production, utility. Isn't it in utility what we saw? When TU is maximum, MU is 0, isn't it? And when MU becomes negative, TU declines. You remember that? So as simple as that. Okay. Now, so when you want to revise it, understand that as direct questions, you will have different types of cost and their alternative names. This morning the exercises we did, no? So that you will have. Questions that are intricate will come from money cost, real cost and opportunity cost. Now this is one, we are summing up right cost, and 3 problems we will work out. As examples, of course, in the class also we have done, but just being revision, we will do it. But as a summing up of this part, I want to just tell you these things, right? That is, direct questions are different types of costs and their alternative names, if any. So that is very important. First level. Okay. Now questions that are intricate means what? Little complex. From money cost, real cost and opportunity cost. Comparisons. I think I wrote down that comparison itself, isn't it? Accounting versus economic cost. Marginal versus incremental cost. That also we did not, the types of cost. Marginal cost is an addition made to the total cost by producing one more extra unit of a commodity, but incremental cost is a change in the total cost because of a big decision which you have made, and that will impact the total cost. Right? Okay. Explicit versus implicit. Oh, you know that. Now, the next set, your table, graph and calculations, TC, MC, AC, very important. Shape of the various curves. Exclusively, we did a segment on that. Shapes of the curves itself. I think you understood that. And fixed and variable cost with examples, of course, we did again. Plant curve and planning curve, even the curves we have revised. Okay. Now, we will do some problems. Oh. Wait a minute. We will do some 3 problems I've taken and kept. We will do that and then we will go to the other part. Okay. I will write down the question on the screen itself. I will write it down instead of dictating. Okay. Okay. First, sum 1. What will be the TVC? What will be the TVC if we produce 2 units? Okay, and the data is given here. Units and TC. I'm giving you units and TC. Units 0, 1, 2. TC 20, 37, 50. So what will be the TVC if we produce 2 units. So as I work out my answer, okay, I know that TC is equal to TFC plus TVC. I have data for TC because when the unit is 0, there is no TVC. Okay, so I understand that TFC is equal to 20. And for the second unit, I find that the total cost is 50. So I have data on my total cost. I know that total cost is 50. I understand that my TFC is 20. So my TVC is 30. This is one type of question. You know, you interchange the formula and do it. Okay. This type of question is one where you change the formula and you do it. Okay, that is one. The next type which we can give you is the second one. AFC we will do. This is TFC we did. We will do sum 2 will be AFC. Because I am choosing only some repeated questions so that it will be helpful for you. That is my agenda actually. Now this is there. This is sum, example sum or exercise sum 2. Okay. There. Let me put down the sum itself. A firm's AFC, average fixed cost, is rupees 20. Is rupees 20 at 6 units of output. At 6 units of output. Okay. What will it be? Will it be means what? AFC. Will it be at 4 units of output? This is another type of sum. I am doing each type of sum. Okay. TVC we did one type. Now, no, TVC, yeah, we did one type. Now AFC. Okay. So now, what am I going to do? Now, what is the information I have? That's what earlier also I did know what information I have. I collected that. What are the aspects I'm having so that accordingly I can use my formula. Remember, these are all formula based. You may have to just interchange it. Now, I have my AFC and I know my AFC is TFC by Q. So, I try to write my formula first. Q is number of units, isn't it? So, now I do that and I have AFC already which is being given and I also have the units. Okay. So, my AFC is 20 and here TFC is there and here I have what? My Q as 6. Now when I multiply these two, I will get TFC. So my TFC will be 20 into 6 which is 20 into 6 which is 120. I got my TFC now. From the available data, I am doing this. Now, for the 4 level of units, what will AVC be at 4 units of output? I divide my 120 by 4 and I get 30. Because I know it is TFC, AFC is TFC by Q. So, from the given information, I accordingly make use of my formula. I interchange. So, here in this example, I noted that AFC is given. I need not have to calculate AFC. I am given AFC and I am given AFC for 6 units of output. I am asked about AFC at 4 units of output. So what do? I first calculate TFC. How do I do it? AFC into Q will be my TFC. I got it at the first step. In the second step, what I did, I use the same thing to understand what will be the AFC for 4 units. So I divided my TFC by 4 units of output and got my answer as 30. Okay, this is one type of problem. Okay. This I have taken also another type of problem for you. because I want to see some repeated patterns. I'm only finding out patterns of questions so that you will understand it easy. Okay. Yes. Yeah. We'll go to this question. All these are your exercise sums. Okay. Go to the next one. Sum number 3. I'm writing the problem also so that you can know. Okay. What will be, so we did a problem on TVC, we have done on AFC, maybe I will take up marginal cost, okay, MC. So TFC, one in variable cost, one in fixed cost, one as a total cost component, one as an average cost component, one is a marginal cost component, okay. What will be the marginal cost of 67 units? What will be the marginal cost of 67 units of production accounting as per the table given below? I give the table also for you. As per the table given below. Okay, we'll do the table. We'll write the table so that you will know what type of question. So they're asking you about marginal cost, right? Now you have the units there and you have total cost. Okay. 0, 10, 25, okay, 37, 67. All these are units. Remember, units of production, units of output. You can have it in any way, right? Now total cost. Total cost in rupees, you know that. I fill up the data given 160, 200, 300, 500, 1400. Okay. Now they're asking me what will be the marginal cost of this. Okay. We all know that, isn't it? So I am going to work out this problem for you. Okay, or you would have also worked out, but let us also try doing this. Now, immediately I go into the formula because formula only tells me. Yesterday also I was telling Karan, no, you write the formula and do the sum. Not directly, we can mentally calculate, but formula gives me an idea as to how to go about perfectly. You know, what is a given data? How can I arrive at the answer from the given data information? What we did in TVC and AFC, right? Okay, what is the problem here? Here is delta TC by delta Q. I just have this in mind. Now delta TC, change in the TC. Okay, so 1400 minus 500. What is delta Q? This one. 67 minus 37. Please remember here, your MC in the denominator is not 1. Always we have seen 1 only. But this is a different example. Okay, so now I have my answer as 900 by 30. Okay, and I get it as answer as 30. So what is my marginal cost per unit? Marginal cost per unit is 30. Now my dear students, always marginal cost is defined as an addition made to the total cost by producing one more extra unit. But this is a different kind of an example. Here I cannot do it by 1 because look at the difference. Even if you say TCN minus 1, if you look at it here, for us a given data is set itself is like this. So what I do is, you have to find out the difference between the two cost components, difference between the two unit components. So 1400 minus 500, 67 minus 37 gives you your delta C and delta Q, and I get the answer as 30. This is one model sum. Okay, I told you now I'm choosing only model sums and giving it to you. Okay, so we have done in one sum with the TVC, total variable cost. With the given information, we were able to change it and do it. Again, AFC, we did average fixed cost and one different type of marginal cost, because we all know that in numerator you will get only one. It is normal. But that we did in the classroom, a big table was there. I gave you TC here and there question marks. That was there, but this is a different type of MC where the difference between the two is not one, but whatever it is, accordingly you can have it. Okay, this was given one time, so I have given you this. Okay, yes. Now let's further go on, because as we follow the question banks and all, it's useful for us in the revision time. Okay. This is what I wanted to give you, another exercise, a summing up exercise for you. Let's do that properly. Okay, the answer comes first. That's why I have to change it now. So I think as a concluding part, we need to do a bit on this. That's what I feel. So that's why I'm giving you this. Now, having revised the topic so extensively, we have to do one exercise, okay? I call it as G class exercise because we are in Google Meet, no? Okay. Economic cost is explicit cost. We have to fill it up. How to compute accounting profit? We need to know the formula for it. Can variable cost be semi in nature? You can say yes or no. Real cost is also known as waiting cost. Remember, real cost denotes the trouble, the pain, the strain, the turmoil, all that was gone through, all that is gone through in the process of production. It's a psychological concept, a subjective phenomenon, and basically it was given by, the premise of it was given by Alfred Marshall. However, it did not pick up well in accounting perspective. Why? Because, when you say something is not quantitative, it doesn't work out well as real cost. I mean, it doesn't work out well. Does social cost include private cost? Total cost by quantity is average cost, yes or no? SAC is known as planning curve, yes or no? LAC under variable proportion is U-shaped, yes or no? Or true or false? Dash costs are imputed value of the entrepreneur's own resources and services. Please have a look into that questions. Try to do these answers. Try to attempt the answers. It should be easy only to my knowledge, because we have done an ample revision. I think we did a pretty good revision of cost analysis. What all is important? How should we even prepare? Our preparation mode for the examination for the cost topic, how should it be? Also was given to you, and yeah. So I will give you time. You can just quickly do. Okay. Yes, time up. Explicit economic cost is explicit plus economic cost is explicit cost. No, because it includes what is that? It's like a true or false exercise I've made. So economic cost is explicit cost plus implicit cost, isn't it? So this is false. How to compute accounting profit? TR minus explicit plus implicit cost, or TR minus economic cost. First one we say false. Do you understand why? Economic cost is not explicit cost alone. Economic cost is explicit plus implicit cost. Remember that. We are not saying that economic cost does not include explicit cost. We are only saying that economic cost will be explicit plus implicit cost. That is where we are trying to emphasize. Whereas accounting cost is explicit cost only. Okay, now formula for accounting profit. That's why I showed you that slide. No, that we saw in our note. In our Word document, we saw, no, it is what is accounting cost, economic cost, accounting profit, economic profit. Okay, can variable cost be semi in nature? Yes, we have seen semi variable cost, we have seen the graph of it also. Real cost is known as weighting cost, true, it is known as weighting cost. Social cost includes private cost. Yes, it is social cost plus external cost is, private cost plus external cost is social cost. Total cost by quantity is average cost. Yes. TC by Q is average cost. Delta TC by delta Q is marginal cost. Remember that. Okay. SAC is known as planning curve. No, definitely not. Even with the curves we have seen, it is plant curve. LAC under variable proportion is U-shaped. Yes. See, what we saw was LAC under constant returns, where we saw how was the curve? Straight line, isn't it? See, so but what is our question now? Our question is on LAC under variable proportion. Please remember all this. That's why I told you SAC and LAC read as a separate segment. Okay, and the dash costs are imputed value of the entrepreneur's own resources and services, implicit cost, isn't it? That is the point you have to understand. Are you clear now? Yes. Okay. Now, can you state the reasons for the two questions I've asked based on this graph? Why is the TVC starting from the origin? The second one is, what is the rationale behind the TFC starting from above the origin? Quite possible questions, two questions. The answers are obvious. TVC is about total variable cost spent on variable factors, and they are required only when the production process is on, isn't it? So you don't require raw materials, fuel, or daily wage laborers. You don't require them and there is no production. So it is zero. When the production is zero, total variable cost is not incurred. Whereas TFC, we start from above the origin. When output is zero also, irrespective of the fact whether the production process is on or not, we have to incur total fixed cost. Isn't it? You are not going to send off your employees, permanent employees, when there is a lean period. No. You have to maintain your plant, equipment, machinery, buildings, you have to pay rent. You're going to say, no, this is not the production period, it's a lean period, no rent. No. Whatever it is. Whatever is a fixed factor expenditure, it will happen. That is the reason why it starts from. So TFC will not be zero, even when the number of units is zero. But TVC will be zero when the number of units is zero, because there is no variable cost when the production process is not happening. Are you clear? Yes, 2 core points. Yeah. Now, theory of revenue is what we are going to go now. So, okay, you understood the 3 sums, example sums from different segments, and these are to give you some important help or tips. Okay. Now, we go to the revenue topic. Ma'am, what should I know in this? Of course, TR, AR, MR. Definition, numericals, and the graph, isn't it? Because we have done TC, MC, and AC, it will be easy. I mean, it's going to be a little understandable to you. Numericals is precisely the same. In fact, you remember in the class when we did the same type of sums we did, actually for cost and revenue, numericals and graph. or graphical representations. Now coming to the graphical segment, so that is where there is something very exclusive here. I will underline that. So as a revision class tip, I can give you this. You will have a different curve for perfect competition and imperfect competition. That being an exclusive part of this topic, they can question you, right? So perfect competition has a different revenue graph, and imperfect competition has a different revenue graph. So in graphical segment, you have to be clear. Do you understand this? Right? So in my lesson on revenue, I'm going to understand what is TR, AR and MR, definitions, formulaic expressions, numericals. In the graphical segment, I will be keen to see the difference. As I revise, I will note how the revenue curve is in perfect competition and how the revenue curve is in imperfect market. Probably this is the most expected question. Now, this seems to be a very small topic because you don't have this intricate classifications, as we did in cost. So many types of cost with lot of examples, so many diagrammatic representations. All this kind of a thing is short run, long run analysis. That and all you don't have. But as an introductory topic to market structures, as a prelude to market structures, where we will be using the tools MR, MC, AR, and AC, that time you are not going to study about those concepts. Very clearly, you finish off AR, AC, MR, MC conceptually, and then enter into your market structure. That's why we call it as prelude topics for market structures. That's where revenue topic is gaining its significance. See? Very clearly, you have the graphs here. Okay. Now, AR, TR and MR, look at your pure competition. It's meaning also perfect competition. Your AR and MR will be the same. That is the point. Your AR and MR will be the same when you look at your perfectly competitive market. Look at the example we have seen. AR is 20 at all units of output. MR is also 20 at all units of output. You know what is average revenue? Average revenue is revenue per unit of sales, isn't it? And what is MR? Addition made to the total revenue by selling one more unit of a commodity. And what is total revenue? Summation of the revenue which is obtained or the income which is gained from selling all the units of the commodity. So as far as definition is concerned, you will not have any difficulty. But between the market structure, see monopoly as an example of imperfect market. You see your AR and MR. They are not the same. They start same, they are not the same. AR is 20, 18, 16, 14, 12, 10, 8. Your MR is 20, 16, 12, 8, 4, 0, minus 4. You see, accordingly, look at the curves. This is for your perfectly competitive market. Of course, here I have given the AR curve separately for imperfect market and the TR curve also accordingly. But we have drawn that and shown you that how it is. It goes up, TR goes up, comes down, etc. Okay, you can construct and see, but this is very important. These two and these two are extremely important. Market as important for the examination. You may also draw the diagram and keep it. Because in revenue, this is a very exclusive segment. You have to understand. Okay, so what are we doing in this segment? So here, look at my output, look at my revenue. AR is equal to MR. Both of them are 20. Throughout, first unit 20, second unit 20, third unit 20, fourth unit 20, fifth unit 20, sixth unit, it's all 20. But here it is not there. Your AR is coming down, your MR is also coming down. AR is sloping downwards, MR is also sloping downwards below AR. You remember the small difference which I wanted to tell you? Yes. So when they give you identify the market forms, between these two there is one difference. Flatter curve will be monopolistic competition. Even in the imperfect competition, a flatter AR is monopolistic competition. A steeper AR is monopoly market. Okay, that intricate one I wanted to ask you here. Okay, now we will do a problem in revenue. Yeah, as usual, I'll write a question. Yes, now you did a TC, AC and MC, so that should be fine. But anyway, I want to give you an example sum in revenue also. And what you do now, as we did in the class, you remember, we had units and then we had TR, AR, MR, everything in the same thing. And we did it with question marks here and there. So that is one brain sharpening exercise, here and there question marks. What we did in the class, like that also you try. I will show it out, show it also now if you want. P in symbols I'm writing. See, apart from what we did in the class and what was given as assignments, see, look at your assignment questions and all. Okay, because key was also later on shared. No, those are very important. So there we have given you the several models, but some models where people forget it or don't remember, that kind of a thing only. I have now kept it for you. Okay. This I find in something which is like repeated only with the numbers changed. So that alone I check that up and I give you. I do a small checkup and only give you. Yeah, yes. Now, what is the question? A seller realizes 25,000 rupees after selling 15 units. And he realizes 35,000 after selling 25 units. What is MR here? Please go back to your, the cost, similar cost example we did. So this has been given with an asterisk mark in the scanner for people to understand that here in these specific problems, MR is not 1. So for you to understand that MR is not 1, it is given here. Can you understand this point? Okay? Yes. Yeah, you try this. I will tell you. I'll give you a minute to try. Okay. Solution. Okay. Now, in the solution, what I'm going to do is, why to take always a delta TR by delta Q? Okay, I will take, now what is the question here? What is the MR for 25 units? That is what they are asked, isn't it? For 25 units. So what I'm going to write here is, I'm going to find out, I have to find out for MRN, it will be TRN minus TRN minus 1, isn't it? That is the formula you all know, right? But here, how are we going to use it? Given this data, look at this. For me, it will be TR of 25 minus TR of 15. TR of 25 minus TR of 15. Can you understand that? That's what we are going to do. Okay. So that is 25 minus 15. I get 10. Okay. Now go to the next one, where what is TR of 15 and what is TR of 25? So look at this, 35,000 minus 25,000, isn't it? So 35,000, yes. Yes. So I will be getting 35,000 minus 25,000. Okay. Divided by 25 minus 15 is 10. Isn't it? I get here as 10,000 by 10, which is equal to 1,000. So I get my answer as 1,000. Are you clear? See a different kind of sum. So my MRN minus 1 is that 1 is minus what is what you are given. 25 units minus 15 units. So this is one type of problem. But the other type of problem which you have seen or discussed is, I'll also give you an example sum of that. Okay. Assume that you write the problem also so that you understand. Assume that when price is rupees 20. When price is rupees 20. Okay, when price is rupees 20, quantity demanded. Look at the problem. Quantity demanded. Different genres or what I would say, different templates only I am giving you. Okay. Quantity demanded is 9 units. So register that point very well. So what is happening when the price is 20, quantity demanded is 9 units. Okay. And next, when the price is 19, which means price is falling, isn't it? When the price is 19, I underline that 19 also. Price falls. What is happening? The quantity demanded is 10 units. Quantity demanded is 10 units. I underline that also. Are you clear? Now, the question says, based on this information, what does the question tell you? Based on this information, what is the MR? So how is your question drafted? Based on the given information, what is the MR? What is the MR? Resulting from, what is the MR? Resulting from an increase in output, resulting from an increase in output, from 9 units, to 10 units. See, this is 9, be clear. From 9 units to 10 units. See, different types of questions only I'm trying to give. Now, what is the answer for it? So, what is the question? Assume that when the price is 20, quantity demanded is just 9 units. When the price falls to 19, quantity demanded goes up to 10 units. Increase of 1 unit. Increase of 1 unit. Based on this information, what is MR resulting from increase in the output? Now you will understand that you are getting back to the old one. Okay. So because it's a solution, I want to give it to you properly. Because some of you mentally calculate and come with the answer. I told you don't do that. If you have a worksheet, working column, you can write down the formula and do it. So what I'm going to do is I'm going to put a column of price. I'm going to put a column of quantity. Okay, both I'm going to do, and I'm going to see this was a small number. Supposing if it was a big number. Okay. So here I'm going to give you two things, that is original and new, because I took one less easy number, simple numbers, but if complicated numbers are there, so you can work out how in your working sheet you will do rough work column. Original price and quantity, new price and quantity, and I have a column for change. I have a column for change. Price, quantity, TR. Okay. So what was my original price? Yeah, it was 20. At that time, quantity demanded. Okay, price was 20. Quantity demanded was 9. Okay, what is a TR? 20 into 9. I got the answer 180. Very easily. See, it's a method of, there is a technique also for solution. Even mentally you can calculate, that's different. Now, what is the, as per the data, what is the new price? Price falls. Therefore, quantity demanded increases. Now, what is the TR? 19 into 10. Okay, 190. Right? Okay. Now, what is the change here? It is here, it is minus 1. And here it is plus 1. Okay. And here addition of plus 10. Okay. Now, when I want to put the formula MR is equal to, I write delta TR by delta Q. So, what is my delta TR? My delta TR is 10. My change column tells. Okay. What is the change in the quantity by 1? Answer is 10. Correct? Yes. See how you can use a formula in this way and do it. So here your MR is 1 only. But in the previous problem, it was not 1. It was some other amount, isn't it? Look at this. 10. Are you clear? 2 sums to make you understand. Okay. So in the revenue chapter, you must be clear with all these aspects discussed now. And study revenue topic as a prelude to what? Prelude to market structures. As prelude to market structures. Okay. Now, I thought here we can also do a sum on elasticity of supply. So this morning we saw all formulaic expressions. We revised graphs and other things. I thought we would do a numerical on elasticity of supply. Any one method, just for revision purpose. Okay. So we will do the sum. They've opened the door here. I have to close it. I just close the door and come up. People have opened it. 1 minute. Yeah. So now I will write the question. See, any sum I want to write it. That is why dictating is not working out well, because you may miss out some data, and these are selected for you actually. So I ensure that it is the same answer in in several sources. Only then we can give you, right? We can just like that not give you some answers, and say that do it and such stuff. Yeah. Because this numericals, I thought as we are doing, next we have to enter into economies of scale, which is purely a conceptual or a theoretical discussion. So today, for cost, revenue, along with that, I thought elasticity of supply, numerical examples we will see. Okay. Exercise sum 1 is this. If the price of sugar, if the price of sugar increases from 8,000 rupees to 10,000 rupees per ton, and look at the thing, sum, due to that quantity supplied, due to that quantity supplied of sugar, due to that quantity supplied of sugar increases from 2,000 to 2,500 tons. See, as you are even writing the numbers, no, just even in the exam, as you're reading, register the numbers immediately so that rough calculation happens in your mind. And in the working column, in the working sheet where you have that, you do it with the formula. And you will know the answer which you get in mind tallies with that formula. So it's not that you have to just calculate it with the mind and leave it, or keep your mind off as you're reading the sum. So I'm simultaneously saying that as you're writing the sum, as you're reading the sum, in the exam you're not going to write, as you're reading the sum, register the data. The quantity is given, the price given, etc. When you do, and approximately you'll get one number as an answer. When you do your working and you get an answer, you know, you will get confidence, yeah, this is what I got. So try that, okay? So to 2,500 tons, compute elasticity of supply. Compute ES. Okay, so this is what the data I'm having. So let's write the solution. I think you may also be working out. You also do your working out parallelly, and let's see whether we are getting the key answer. We will check it with the key answer. Right, so we have to start with the, I think in the class I taught you as 3 steps. Step 1 will be formula. Step 2 is calculation. In calculation also, we make error. Silly mistakes we say, no, in math we make silly mistakes. So that is why you do the step 2. In step 1 in your working sheet or working column, you will have formula. In step 2, the calculation. Step 3, answer within the box with the sign. You remember all that? Okay. So now you have this answer, right? Okay, what is my formula? So ES, capital E or small e, both are same. E is equal to, I write delta Q by Q divided by delta P by P. I know this is supply, though I am going to do it this separately. See, I always have this in mind. Okay, now we will proceed further, and we have to look at the data. So what is the delta Q here? So the the tons of sugar increases from 2,000 to 2,500. So you from 2,000 to 2,500. So it is 500, and Q stands for original quantity 2,000 divided by, what is the price difference? 2,000, isn't it? 2,000 is a price difference, and it increases from 8,000 rupees. So what is your original? What is your original, what is that to say? Your original price. So Q is original quantity, P is original price. Okay. So original quantity, it increases from 2,000 to 2,500. Original price, it increases from 8,000 to 10,000. Okay. So now I do it. This you can do any way you want. Same answer only you'll get. Okay, no problem. However is your calculation, it's not a problem. Answer is 1. Okay, what is this? As the price increases, quantity increases. Okay, plus 1. Isn't it? The answer is plus 1. As the price increases, quantity increases. Okay, note down this problem. Note down the solution. I have one more thing for you. A small thing I've kept for you. I just wanted to give you another problem, but that problem you already know. One question I thought I will give you as a percentage sum. Okay. Yeah. Okay. So we got the answer for it. Okay, that is fine. So one percentage we will do. Okay, but directly if they give you a percentage, no, how to do it. Okay. So this is sum 2. This you already have done for elasticity of demand. So I'm doing it for elasticity of supply. If price of computers increases, you remember we did in the class the gasoline, price of gasoline in the elasticity of demand with a percentage instead of numbers. If the price of computers increases by 10% and supply increases by 25%. Compute. See, my dear students, note this point. They will ask you compute coefficient of elasticity of supply, coefficient of elasticity of the supply of the product. They'll give you the name of product. Remember, it's all one only. Either it will be ED or ES estimation. Okay, compute. So in our solution, it is easy for you to understand. Okay. Yes. So it is ES is equal to delta Q by Q divided by delta P by P. Here I know what should be written. So ES is equal to, where is my supply quantity? 25% by 10%. Okay. I get my elasticity as 2.5 plus 2.5. As the price goes up, supply increases. Percentage problem is 1. and the other one is in numbers. Okay, in numbers you can do. Okay. Yes. Okay. So we are now going to enter into a very, very important segment, economies of scale. So I'm going to do one segment called as economies of scale. Be prepared for it. It's a theoretical discussion. We will be doing that now. Yes, students, I was telling you that in the revision class, I would exhaustively discuss about economies of scale. You would have probably heard of this term, me using this in your laws of production. In that context, I've explained to you, but as a topic, as a component, actually, I wanted to bring this under selected portions, which we will be doing tomorrow. Tomorrow is our last day, no? We kept 2.5 days for economics and the balance for management, right? So tomorrow we would be basically doing selected portions and business environment only. And here we will just quickly go about this, right? Now, what is this meant by economies of scale? Now, gentle reminder I'll give you is, in the examination, the terms, what is economies, what is diseconomies, what is scale, all these are asked. See, wherever there is alternative names, they'll ask you, that's different. But here, specifically, here I can exclude this, but I can tell you that terms, internal economy, what is that internal, what is that external, what is economies, what is diseconomies? With examples also they can ask. That's why I said it can be empirical too. Okay, what is economies? Advantages. What is diseconomies? Disadvantages. Where from does it arise? Economies or diseconomies? From the scale of operation. So what does the scale mean? Size of the firm. Expansion. Large scale firm. As a firm is expanding. What are the advantages and disadvantages? So when I have to define economies of scale, please remember it is nothing but the advantages and disadvantages that accrue to a firm as a result of expanding its operations. Merits are there, becoming a large scale firm. Demerits are there, becoming a large scale firm. That is what we are discussing under that. So specifically merits means economies. Specifically disadvantages means diseconomies. And remember, under laws of production, we studied scale as all the inputs put together. You remember, returns to scale was one of the laws. All there, the scale meant all inputs put together. Here, scale is size of the firm, and that size is with reference to large size. Am I clear? Yes. Now go to the terms internal. So that is the word internal. Ma'am, what is this internal, ma'am? You're just telling about economies and diseconomies. What do we understand by internal? Internal means that which is within the control of the firm. The merits and demerits accrue because of the happenings within the firm, within the enterprise. External factors are not responsible. Our own internal factors, organizations, internal factors are responsible for the merits and demerits. Are you clear? The organization's internal factors are responsible for the merits and demerits. Am I clear in this point? So, what is internal? What is external? That also you have to understand along with economies and diseconomies. So, what is internal? Those factors which are within the firm that is responsible for the advantages and disadvantages. You can't blame external factors. Then, external. Again, economies and diseconomies, you know, the meaning is the same. What is an economy? Advantage. Diseconomies, disadvantages. Scale is also same. What is external? That which is beyond the control of the firm. The reason for this advantage or the reason for this suffering is not my organization and external factor. It is not in the control of the management. Are you clear now? So you have to understand the meaning of the term economies first, diseconomies, scale. Then apply external and apply economies and diseconomies to internal, apply economies and diseconomies to external. That's how you have to move. I think the slides are pretty clear to you. See, look at the scale. Advantages and disadvantages of a firm operating at a particular size. As the scale of operation expands, what are the benefits and threats? And when these are beyond the control of the management, we attribute it to the external factor. They become external economies and diseconomies. Clear? So what is within the control of management? What is caused by the factors within are this internal. Clear? So know the meaning of economy. So this is a concept based topic. Okay. So much is clear. Go to the next one. Now in your material, how have they given it? I have given you in a very layman's language. When you read the slide, you will simply understand it. Because if they give you example also, you must be able to sift out whether it is an internal or an external. At least economies or diseconomies, clearly you will find out. Because economies means all positives will be there, advantages. Diseconomies means negative will be there. But to identify internal or external, you should know the meaning in a simpler way. That's what I have given. But we have given you the parent source. That's how it is argued. Okay. When, see, this is internal economies and diseconomies. This is a clipping on external economies and diseconomies. That also I wanted to show it to you. When a firm expands its size of business or increases its output, it gets some advantages. They are called as internal economies. These internal economies are related to a single firm and not related to all other firms in the industry. So they are bringing out a differentiation between firm and industry. We are not talking about any other firm in the industry but this one. That's what they are making as an emphasis, added emphasis. Now, internal economies, diseconomies likewise are those disadvantages which are internal to the firm. They accrue to the firm when it overexpands its scale of production. Overexpands. Look at the term. When it overexpands the scale of production. And here, one conceptual note you have to remember is Professor Chamberlain, who gave group equilibrium model. So he calls them as what? Complexities of management. What is complexities of management? Internal diseconomies. Make a note of it. What is highlighted? I have highlighted because it's from your parent source. Do you understand it? Have you taken it down? So this is about internal economies. Now when it comes to external, for internal diseconomies, you have the term given by Professor Chamberlain to denote internal diseconomies. What is that phrase or like that? Complexities of management. Go to external economies and diseconomies. External economies are those which are reaped by a firm not on account of its own efforts. Underline that. I'm not getting this benefit because of my efficiency. Okay, but on account of expansion and growth of the industry as a whole to which it belongs. Cement industry is growing, therefore X and Y company is growing. The prosperous period of industry, the sugar industry is making the sugar company do well. Okay, so on account of overall development of the economy and the markets, it is not because of the efficiency of the respective company or the firm. That is external economies. When it comes to external diseconomies, which accrue to the firm as a result of expansion in the output of the whole industry. Over expansion, we use that term now. Now it is all over expansion of that problem pertaining to the industry as a whole. We will see the example. Ma'am, how is it? Give me example. So theoretically, So theoretically, what did we understand? The terms in economies and diseconomies imply advantages and disadvantages. Internal economies and diseconomies are those which are accruing to a firm because of their own positives and negatives. And external economies and diseconomies arise to a particular firm because of some factors beyond the control of the management, right? And particularly for internal diseconomies, Professor Chamberlain has given the term complexities of management. Are we clear? Okay. No. MCQs. See, I've given you this. The internal economies, some slide I've given here. Okay, leave it. MCQs. The economies imply which one of the following? In the context of economies of scale. See, economies, we are not talking about countries. See, economies can be countries. We are in the context of economies of scale. That is why I gave it here. In the context of economies of scale implies nation, money, resources or factors, benefits from the size of the operation of a firm. The last one is answer. So what is economies here? We are not talking about a nation. We are not talking about resources. We are not talking about money. We are talking about economies means benefits or advantages. Diseconomies means disadvantages. Are you clear? So here economies, what's the correct answer? Benefits accruing to a firm as a result of operating on a particular size. Okay, we begin with a simple MCQ. Now more questions. Factor price rise. Is it an internal economy or internal diseconomy, external economy or an external diseconomy? Factor price rise. It is an external diseconomy. There is a rise in the price of the factor market. It is not because of me. Factor price rise is an diseconomy, external diseconomy. Diseconomy we know because price rise. It is going to be a cost burden on the for the producer, for the manufacturer, for the businessman. It is external because factor market operation is beyond his control. External diseconomies. Okay. Now, expert R&D wing of the organization. Example 2. Expert R&D wing of the organization. Is it internal? See, options always will be internal economies, internal diseconomies, external economies, external diseconomies. 4 options are there. Sometimes they may give you none of the given. And that's all. That much only they can give you here. Okay. So, internal economies, external diseconomies, internal diseconomies, external diseconomies. Expert R&D wing of the organization. Expert means benefit. We are talking about a benefit of the organization. Therefore, this is the correct option. Internal economies. Therefore, only I told you, when you are clear about the meaning of the term economies, diseconomies, internal, external, you can know the answer. Now, how did I find out? Oh, this is pertaining to organization. It's not saying R&D wing of the government of India, of some other big firm of the country, no. Of the concerned organization. And expert. Likewise, look at the previous example. Price rise, factor price rise is always a burden. Raw materials are expensive, factors of production are expensive, inputs are expensive. It's a diseconomy. But is it in the control of the firm? No. In factor market, there is a pressure on factor inputs. Everybody is demanding for coal. Everybody is demanding for raw materials, minerals. Naturally, prices goes up. It's not in the hands of any one organization. So we call it as an external diseconomy. Are you clear? You have to reason out and answer this. Okay. Now, more examples are given for you from this topic. Now, is it? Yeah, you make it later. See, variety of examples I took. I didn't confine it to one. I wanted to you all to have variety of examples. We call it as empirical case or examples, practical. Okay. Now, constraints in the skill of the labor force. My labor force is not competitive. We are not talking about general, otherwise general labor force. Country's labor force will be, it's not that. It's not country's labor force. We know it's implied. So, it is an constraints. It's not expertise. Earlier you saw, no, expert R&D wing. Here it is not expert, constraints. The laborers are not, probably their skill is outdated. They have to be trained. Probably there is somewhere there's a lag in their performance. So, it is an internal diseconomies. Why diseconomies? Because constraints, disadvantages. In the skill of the labor force, they will give you otherwise nation's labor force. In UDCs like India, labor force is not a very skilled. It's not like that. It implies it's about the organization's labor force. It's an internal diseconomy. Okay. Example 3. So this page, another example. Go to the next one. Statistical report of the government ensured that the cement industry will be having an upward trend. The PNC, the bigwig in the cement sector, sees the chance to enhance their market share. So you may have to study these examples to understand in which options they will fit. Options are going to be the same. You have no other choice. So a clarity on what is internal, what is external, what is economies, what is meant by diseconomy. That's what you know. That's what you have to know in this chapter. That's why I told you, separately it need not be taken. It can be brought under some heads. I was thinking to bring under selected portions, but tomorrow we are having selected portions and business and environment exclusively. So I thought I will finish off this today. Okay. So now what is this you're understanding here? So constraints in the skill of the labor force. That is internal diseconomies. Now go through the second one. Read the second one. Patiently read the second one. You will understand more on that. Okay, now the statistical report of the government. So the data research finding by government itself. There's going to be an upward trend. So now one of the firms or companies named PNC, it is also a company in the cement sector. So it's a cement company. They want to make use of this chance to enhance their market share. So it is an example of external economies. This growth of the PNC cement company is going to be because of an external factor. The data released by the government, statistical report of the government says that they are going to take advantage, something external, and it's an advantage, so economies. So like that, you have to correlate examples. Okay, now a small graph on this. Look at this graph. Now, you are having on the x-axis output, on the y-axis you are having average cost, right? Okay, draw 3 LACs. See, boat shaped, flattened you. Just now we saw, no? LAC 1, LAC 2, LAC 3. All are there. So from the graph, identify the situation of the organization. From LAC 1 to LAC 2, it is a case of improvement in the output levels, decline in the cost, increase in the cost, none of the given. What is the answer? Decline in the cost. We show decline in the cost like this. We show hike in the cost like this. Because in the y-axis, you have only cost. Are you clear? Yes. Okay. So there is an increase. So this is a decline in the cost. This arrow mark indicates increase in the cost. Okay. Decline in cost is an advantage. Increase in the cost is a disadvantage. Okay. Yes. Fine. That's it. Now we are entering into market structures. So let me make it more big for you.
Now once again show the diagram.
Yeah, please. Please draw the diagram in your mind. In our material also, I have given you the diagram. Okay. Very rarely books give you that. Since I found out, I gave this diagram. And yeah, I just want you all to understand this is for external economies and diseconomies. Okay? I want to make it as external. External economies means it will come down. External diseconomies means it will go up. That's how it should be. So external economies will have a shift from LAC1 to LAC2. External diseconomy, remember this is for external economies and diseconomies. External component. Yes, have you drawn the diagram?
Yes, ma'am.
Okay. Remember, this is a diagram exclusive for external economies and diseconomies. LAC1 to LAC2. That is your external economies. Remember that point. And movement from LAC1 to LAC3 upward will be external diseconomies. See, that is how I find in most of the books. Based on that only I want to give as such. Okay, so that much we have done. Now we have to move on to market structures. What is important in the market structures topic? Please note. What should I focus from the exam point of view? And a few template questions. Classification of markets in general is there for you. General classification also, they are asking questions. I will ask you also. Okay, now types of market based on competition, where the twin classification starts. Perfect competition, imperfect competition. Where the exact classification starts is this. But from general classification also they are asking questions. That's why I want to tell you. Now, you can study this in two segments. In the class also I would have told you. One is study the features of all the markets at a stretch. Means I am talking about like this. Okay, now what I am trying to tell you here is, when you do this market structures topic, separately you have to do, when it comes to competition, market forms based on competition, I always give this exam tip to my students. Two types of questions are coming from this segment. Okay, how is it asked is, one is study the features of all the market forms at a stretch together with prominent examples. That is, I mean, perfect competition, monopoly, monopolistic competition, oligopoly, at least. All these market forms, features and with examples across the market forms, the four market forms. Second, equilibrium price output determination, the graphical segment for all together. So that you will know how you can manage in the examination, because you have to identify from the graph which market we are talking about. Is it profit situation? It is loss situation. All this is there. Equilibrium price output determination. Your graphical segment. So what I'm asking you to do is, as an examination tip, across markets you do this. For all the markets, I mean, at least you have in mind the 4 markets where we have graphical representation, no? Perfect competition, monopoly, monopolistic competition, and oligopoly. So for these 4 market forms, first you will study the features with examples. Then across the market forms 4, you will study the equilibrium price output determination. So that is one of the best ways of preparing for the examination. Okay. Now look at these market forms. For all of them, please study the name, the very name. Duo means what? Oligopsony means what? Monopsony means what? Bilateral monopoly means what? Okay, all this mono, duo, oligo, they're all Greek words. That much you know, isn't it? Mono is single, poly is seller. Monopolistic competition is a blend of perfect competition and monopoly. Duopoly is, duo is two, poly is sellers. Oligopoly, oligops means few, repeated question. Few, oligos means few, repeated question. Repeated question. Oligos plus poly means sellers. Oligopsony, factor market. Oligopsony is factor market. Remember that. It is not commodity market. I've told you many times. So who are the buyers here? Buyers will be less. Because buyers are only businessmen, not all of us. You and me are not going to buy the raw materials and factors of production. Who will buy it? Businessmen and entrepreneurs. So buyers are less in number in oligopsony market, which is a factor market. But where what is bought and sold is factors of production. Then monopsony. It is single buyer market. Single buyer market. Monopsony. Single buyer market. In the class, how many times we did this? You remember that? Monopsony. Monopoly is single seller. Monopsony is single buyer. Single need not imply individual. It can be an association. It can be a forum. It can be a group where the channel is single. Only the channel. Government means, yeah, so many people are there. So many individuals are there. It's an hierarchy. But still we call it as monopoly. Because the entry point is single. The channel is single. Government channel. Okay. Bilateral monopoly. Buyer, single buyer meeting a single seller. How many times we have done? So this name itself, that is why in your Bharadwaj material, we have, before going into equilibrium price output determination, we have dealt each of these topics elaborately, giving you what is meant by each of the market forms where possible with examples. Are you clear? Yes. And the 2 types of questions will be, one is theory, features with examples, where you have to identify from the statement or the example the type of market. And here from the graph, identify the market, identify whether it is profit or loss. Are you clear? This is what I want to literally tell you first. You know, at the outset, I want to make this clear to you. This type of question only will come. What is that type of question coming? On the names of the market form. Features, from the features and examples, identify the market form. From the graphs, identify the market form and whether it is profit or loss. So what are the 3 main types of questions? right? So club it into three important questions. When you prepare for the exam, as you prepare for the exam, make it into these three types. So how will you do your revision? Names of all the market forms with meaning. Okay, right? And here ensure that for competition based markets like monopoly, duopoly, it is there. But for general classification, you will have like small spot market, forward market, regulated market, unregulated market, local market, national market, international market. That is under general classification. And here market as a competition as a factor for market classification, you will have perfect competition and imperfect competition, and under imperfect competition you will have all the market forms. Clear? Okay, so study that. Then go any feature you take up and see whether it is going to be which market form. Examples, which market form. I think in our big assignment I sent you market structures. There it is. This is how we prepared and sent for actually. And here identify the market forms. Not only that, profit or loss, that also from the graphs. So this is just three types of questions you are going to prepare for this market structures. Okay. Yeah. So this general classification, I'm just giving you this. Based on location, based on time, of course competition is there, nature of the market, regulation of the market, volume of business, all we have done. Okay. So what I'm doing is this. One and all answer is there. Okay, on the features, so let me ask you some questions, okay? Or should I type it out there itself? Okay. When first three features alone are met in a perfectly competitive market. In a perfectly competitive market, it is known as dash competition. Oil cartels are examples of which market form? Markets for goods based on a country's customs is called as regional market. True or false? Share market is an example of unregulated market. Yes or no? Time element in value analysis was given by in the long period, supply can be moderately adjusted. True or false? Markets that cover two or more adjacent cities are examples of dash markets. Okay. So we will do this set of questions. This exercise we will do and then go for the other one. When first three features alone are met in a perfectly competitive market, it is known as pure competition. Please remember, out of the 7 or 8 factors, coming under perfectly competitive market, large number of buyers and sellers, homogeneous product and uniform price, free entry and exit. This alone are met, it is pure competition. But to call as a perfectly competitive market or perfect competition, you have other factors. What are they? Mobility, perfect mobility of the factors of production, perfect knowledge on the part of the buyers and sellers, and no transport cost or transaction cost, absence of government intervention. When these are added, it becomes perfect competition. So what is the answer here? Pure. Because first, not any three features, first three features. This is a basic requirement. Oil cartels are very good examples. I was telling you many times in the class. Oligopoly. You have oil cartels, soft drinks industry also, automobiles, aluminum and mineral. Generally, you will have these examples. And remember the features and types of each market with examples we studied. Remember that, okay? With examples we studied, right? Okay, oligopoly market now. Markets for goods based on countries' customs is called as regional market. The answer is false. You know why? Because it is called as a national market. This comes under a general classification based on geographical location. You know that, no? Local market, regional market, national market, international market. This comes under national market because countries, nation and tradition will be respected. We said no, anything like a dress code, dress wear, dhotis, saris, bindis, the language of the country. All this as examples we have seen. So this is not a regional market, it's a national market. Share market is an example of unregulated market. My dear students, share no. Yeah. It is an example of regulated market only. So is share market an example of unregulated market? No. It is regulated by SEBI. We have SEBI. For unregulated market, you can give example of perfect competition, free market economy, right? So because the share market is fluctuating, don't say it is a unregulated market. It has SEBI guidelines to be observed. Because being a speculative type, the operation business is speculative. So you have these fluctuations, right? Time element in value analysis was given by Alfred Marshall. Please remember that. Very short period, long period, very long period. Very long period we won't take into analysis at all. Very long period is also known as secular period. Okay. In the long period, supply can be moderately adjusted. Answer is what? False. Because it can be completely adjusted. Answer is false. Because completely it can be adjusted. Moderately is only for short period. In very short period, you can't adjust supply. Because you're dealing with perishable commodities, no? So supply will not be driven by price. This morning also we saw price elasticity of supply. Okay, so completely adjustable in the long run. In very long period, we don't take into account for analysis, economic analysis, because the period being long, your forecast will not be scientific or valid. That's the main point. And markets that cover 2 or more adjacent cities these markets are example of regional markets. See whether you have your answers were right. So I'm giving you some kind of template questions, model questions to revise. Okay. Now look at this. Few more questions are there. Okay. From segment A. How should I prepare? What is the difference between pure market and perfect market? Remember, when 3 features alone are met, it is pure competition. First 3 features, not anything. When 3 plus other features are there, it becomes perfect competition. Concept of kinked demand applicable to which market? Please remember oligopoly. Kinked demand curve given by Paul Sweezy. Sweezy's model. Paul Sweezy. Stock market is an example of, we saw that, isn't it? Regulated market, not unregulated market. Who gave time element? Already given that, we saw that. No, it is Marshall. These were some kind of expected questions. Very long period is known as secular period. Non-price competition is a salient feature of which market? Monopolistic competition. Non-price competition is a brand war. I am better than you. Okay. And product differentiation is a key feature of this monopolistic competition, not monopoly. Price discrimination as a tool is coming under monopoly. Product differentiation under monopolistic competition. Okay. The condition where the single seller meets a single buyer is known as bilateral monopoly. Look at the answers. Okay. One more set of questions I will write before going into that equation, now condition segment. Then we can go to the graphical segment. Okay. More exercises or more questions. In economics, market refers to a place. True or false. Okay. In economic parlance, elements of market include bargaining. Okay. Some other types of questions I'll give you. Okay. Market for gold and silver is generally a national market. National market. True or false? Okay. Monopsony, look at me, monopsony is a single dash market. Okay, few other questions. See, these are easy questions only, but you have to recollect and write. No, it is not graphical at all. It is not a graphical segment. That is what I want to say. Even before a graphical segment, you will have such things. Okay. Simple monopoly. Simple monopoly means a remote substitute exists. True or false? And types of monopoly, types of oligopoly, study all those in detail. Okay. Ability to pay comes under dash type of price discrimination. The practice of charging a low price in the foreign market and a high price in the foreign market is called as dash. Trademark. Trademark is an example of monopoly power. Monopoly, see, intricate questions I'm choosing. Monopoly power given by option A is legal, B is government, C is technical, D is combinations. Okay. The tea industry, the tea market, with its different brands is an example of dash market. The options are A, perfect competition, monopoly, monopolistic competition, and D is none of the given. And the last question, so that by now you would have gone through all these questions. One more which I wanted to very much ask you is this. Last question, okay? This I have noted, marked and come for you. So that alone I wanted to ask. Financial instruments. Financial instruments is an example of dash market. So we can have all the same options as above, okay? We can take the same options also and we can do this exercise. Okay. Okay, we will do this now. In economics, market refers to a place. True or false? False. Because it is, in common man's understanding, market is a place. Whereas in economics, it's an institutional arrangement. It's a commercial transaction. It is a commercial condition where buyers and sellers meet and they negotiate a price. A final price is getting fixed. So it is not necessarily a market. You require a buyer, you require a seller, you require a bargaining, you require a final price to be settled, all goods and services, but not place is not a condition. Okay. In economic parlance, elements of marketing include bargaining. True, very much. Bargaining for a price is always there. Market for gold and silver is generally seen as a national market. No, false, because it is an international market. This is taken from the general segment. So it is international market. It is international market. It is taken from the general segment. Okay. Monopsony is a single buyer market. Seller means what? Monopoly. Single buyer market. Okay. Ability to pay comes under what type of price discrimination? You have personal price discrimination, place price discrimination, trade or use discrimination. It comes under personal. It comes under personal price discrimination. It is not trade, it is not place. Okay. The practice of charging a low price in the foreign market and high price in the domestic market. Make this as domestic. In the domestic market is called as dumping. Dumping. Remember, under monopoly we saw no price discrimination. So in monopoly, price discrimination, monopolistic competition, product differentiation. It can be real. Really, I'm inserting, I'm making my product different. I'm adding a new ingredient, new flavor, new technology, or imaginary. I'm promoting my product. That is why advertising costs, promotional costs, brand war, all these are features of monopolistic competition. In perfect competition, homogeneous product. Only product awareness will be created. So read our Bharadwaj material, you will understand. I think by now you should have read. When you do the revision, you will know. That's why I said across markets, you do the features and examples. Across markets, you do graphical segment. It will be helpful. Okay. Simple monopoly means a remote substitutes exist. True. Pure market, pure monopoly, no substitute. In simple monopoly, no close substitute, which means remote substitute is there. Clear? Okay, that we left out, no? Look at this. Yeah. One question in between. Then, the practice of charging a low price, yeah, dumping. Trademark is an example of monopoly power. You remember we saw something as monopoly. Who gives a monopolist his power? Government. Legal power. Laziness of the consumer. You remember we saw the example, laziness of the consumer, bias of the consumer. Combinations. Even in monopoly, they will try to join together and meet. That's why I said monopoly doesn't mean, single does not mean individual. Two strong individuals join and attack the market. That also is a monopolistic form. Okay, so here, what is the answer? Trademark is an example of legal. Copyright, patents, all this. The tea industry with its different brands is an example of monopolistic competition. Because anything having a lot of brands, no, come in toothpaste industry, cycles, I think in our books I gave cycles, shampoos, all these, okay, is an example of, yeah, the answer is given here, monopolistic competition. Financial instruments is an example of perfect competition. Perfect competition. Isn't it? We said a perfect competition was conventionally considered as a myth, but now you have certain examples which are cited, which books have started citing, economists have started citing, like gold and silver market, financial instruments, agricultural commodities. Few examples I've given for you: agricultural commodities, financial instruments, precious metals. Okay. So that is where it is. So do you see the theory part? How much is there in the theory part itself for you to revise? Now we are entering into what? The graphical segment, segment 2. So revise all the examples, features, types, etc. for all the markets together. Then go for graphical segment of all the markets together. It's a good revision. That's a way of revising. In the class itself, I was telling you that. Do that way. Okay. Now, what is that? I'm going to first have as a clue. Okay. What are the conditions for equilibrium? Or how many conditions are there? 2 conditions are there. Repeated question. Mark it off. Just like that, mark it off. 2 conditions are there. MC is equal to MR. MC curve cuts the MR curve from below. Okay. Please understand this point. That's what I wanted to know. Okay. They have asked this question. That's why I confirmed it. So, how many conditions are there? That itself is a question. 2, 4, 6, 8. 2 conditions. What are those? Don't bring in average revenue and average cost here. As I was explaining to you the graphical segment of market structures, I made it very clear. Understand where AR and AC tool should come. where MC and MR are important. When you talk about determination of equilibrium price and equilibrium output, that's where your marginal cost and marginal revenue is important. MC is equal to MR. Marginal cost is equal to marginal revenue. And the second condition is MC curve cuts the MR curve from below. I think how many times I would have told that, why it is cutting from below. Because once it reaches the optimum level of output, after that it should rise. If it keeps falling, then there will be no incentive to stop at that and fix your optimum level of output. That will not be the equilibrium level of output. That's what I've been telling you that, right? So MC curve cuts the MR curve from below. Not only that we saw these two as conditions, I told you why these conditions are important also, right? Then what are the profit and loss situations? The three situations using two economic tools. See, clearly given in the slide, three situations. You can have a situation of normal profit. There can be a situation of supernormal profit. We can also have a loss situation, right? So where AR is equal to AC, the two tools which are going to be used to study the profit and loss situation are average revenue and average cost. For equilibrium output, it is marginal revenue and marginal cost. So AR is equal to AC. What is that condition? Normal profit. And understand normal profit is the situation where your economic profit is zero. Even that I've hinted here itself. See, these are the questions which you can get from condition segment itself, Based on the four tools, you can have these questions. Based on the four tools, you can have this AR, AC, MR, MC. Okay, so when AR is equal to AC, normal profit, zero economic profit. When AR is greater than AC, supernormal profit. AR is less than AC, loss. Okay, now graph based question I have added to imperfect market. Firm is a price taker. Industry is a price maker. Okay, like that questions. Monopoly, price maker. In monopolistic competition, the sellers are too many in number to influence a decision. Okay. Equilibrium price output determination, short run and long run scenario is important. Yeah. In monopolistic competition, both buyers and sellers are large in number. So any single person cannot influence the market. That is one point you have to have in mind. In monopoly market, it is different. He has a complete control of the market situation. Is a complete control of the market situation. So the scenarios are different. Okay. So these are the important conditions you have to have in mind. Okay. When you're going to study market structures. I think in tomorrow's class, we can freshly do the graphical segment. I will ask you to, I'll give you the graphs. You have to identify because it's not a descriptive paper. When I give you the graph, you must say whether it is profit, supernormal profit or loss. Which market? Identifying the market, identifying what? Not only the market, identifying profit or loss. Okay. Yes. So today we have done quite substantially. We have covered elasticity of supply, theory of cost, theory of revenue, economies of scale, market structures. We can do a small graphical exercises. Not that you are going to draw it again and I'm going to teach it again because we have done elaborately. More than elaborately, we have drawn, made you drawn in the, I have drawn, you have also drawn, not shown pictures. So here I will now make you identify the exercise would be, graphical component would be, look at the graph and tell whether it is monopoly or monopolistic competition. Okay, so that we will do tomorrow, selected portions. Where we will do that quick revision as we did economies of scale, business environment. I think that we will keep it for tomorrow. Okay, and day after tomorrow, that is tomorrow is Wednesday, no? So Thursday and Friday we will do completely management. We'll stick on to management. Are you clear? Yes.
Yes, ma'am.
Okay, my dear students, so we have done for the day. We have almost covered our target, and yeah, we have done our target, I think, substantially. Yes. And we also did economies of scale. So we have in that we have also brought in economies of scale. You understood, I suppose you understood the conceptual note. That's purely a conceptual topic. So here the graphical, that exercise, graphical part exercise you will do tomorrow, fresh in mind. So much of, exercises we did today, theoretical and numericals, etc. So tomorrow you can just start with a graph. Selected portions will be purely theoretical. Business environment, I'll ask you quickly exercise questions from that segment will be there, because that also comes under economics. I want to finish it off, isn't it? Day one I told you the segregation of marks you saw, isn't it? Micro, macro and business environment comes under economics segment, 70 marks carrying. So that fundamentals of business economics includes all. The 30% is only for management. Okay, and there we will do the last 2 days on that. Okay, thank you.